Everyone talks about down payments, but no one talks about closing costs when buying a home, and that's the real number that blindsides first-time home buyers. Today I'm breaking down closing costs, what you'll actually need to know, what you're going to pay in 2025 and beyond, and what to expect on how to potentially lower your closing costs moving forward. This is by far one of the most important videos you'll ever watch when buying a home. I'm Fernando DeCunha, the Mortgage Maverick, and after helping over 3,000 buyers in my 15-year career, there's one thing that constantly shocks people when buying real estate, and that's closing costs. And why is that? Because they're not properly explained by professionals until now. Closing costs are everything you pay to close on your new mortgage and set you up as a new owner of the home. Here's an example of closing costs. You have loan costs, third-party fees, prepaid escrows, and anything else miscellaneous. Now let's dive in one by one in sections to see exactly what you should expect. Loan costs are pretty simple and they can be broken down very easily. You typically have your underwriting and processing fee. That usually ranges from about $1,000 to $2,000. You have your credit report fee. That could range from about $100 to $250. And then you have other things like flood certification, and that's whether the property is in a flood zone or not, and some other fees like the bank attorney fee to make sure the paperwork is done properly. And most importantly, what people look into is something called discount points. The fees that I just broke down for you are pretty standard industry-wide, but you have to be careful. The next closing cost that catches home buyers off guard is your prepaid escrow account. You're probably saying, what's an escrow account? I'm not talking about the spinach. I'm talking about escrow, ESCROW. Escrow is essentially your lender holding your money in an interest-free savings account to pay future taxes and insurance on the property that you own. So let's break down what goes into an escrow. First, you have your property taxes. Your property taxes, typically when you buy a home, they normally range between 2 to 6 months that are collected at closing to build that property tax escrow. The second aspect of escrow is your homeowner's insurance. So when you buy a home and you finance it, you're required to have homeowner's insurance on that property. Normally, a lender will require that you have your first year of insurance premium paid. And lastly, your prepaid items is your prepaid mortgage interest. So if you're closing, for example, in December, you would pay from the 10th to the 31st of December. And then what will happen is that your first payment in February is actually for your January mortgage payment because mortgage payments are paid in arrears. Finally, we come to the most fun section, at least in my eyes, is your third-party fees. The first thing you could expect is an appraisal. An appraisal could range from as low as $350. The second portion of third-party fees are your title fees. So your title insurance could cost you anywhere between $800 up to tens of thousands of dollars if you were getting a loan. Also, you have your attorney fee, what you're paying as a buyer to represent you on the legal side of things. Those attorney fees can typically range between $1,000 to $1,200 on the low end, all the way up to $3,000 to $4,000. Now, the one thing about third-party fees that lenders don't have to disclose to you are fees that are typically paid outside of closing. And those fees can include inspection fees. We also don't have to disclose a survey fee to you, but that survey is going to vary depending on the professional you use. So you could get a survey for as little as $800 or up to $3,000. Another thing within your closing costs that we all cringe whenever we think of is government fees. Mortgage tax in New York is 1.05% right now. And then you have like recording fees, which are several hundreds of dollars as well. So the government fees that are thrown in that process through your title company will include your transfer taxes. You could be paying upwards of $30,000 for buying a home of, let's say, 1.2 or 1.3 million just in mansion and mortgage tax. We also have to include your down payment. And what this is called is your final cash to close. And that cash to close includes your down payment, all the closing fees that are paid to vendors and third parties, and lastly, the prepaid items, which includes your taxes and insurance and any prepaid interest you need to pay. For most buyers, depending on what state you live in, typically it's 2 to 5% of whatever the price is of the home on top of your down payment. Now, in those high tax states like New Jersey, New York, California, expect more like 4 to 7%, especially if you tack on that mansion tax on top of your down payment. 6 ways to lower your closing costs. Number 1 is potentially asking for a seller concession or credit. Number 2 is lender credits. Number 3 is shopping title companies. Number 4 is close at the end of the month. Number 5 is maybe you have some eligibility for down payment assistance or grants. And last but not least is number 6. You could potentially negotiate your realtor fee. Closing costs aren't a scam and they're not fake fees. There is good debt, like mortgage debt, and there's bad debt. And if you want to learn more about that, you're going to watch this right here.